Good morning. Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from Ticket-Taker. Let's jump right into the gold market here, trading last at 1732, up 280. And the gold market seems to be a little bit stronger today, up about $3.50, while silver is down about 31 cents. Copper is down about 6-7 cents, and the E-mini is up about 8 points to 39.6650. You got some of the derivatives in the metals here are slightly lower. Nugget down 67. J-Nug down 173. GDX down 11. So far, it seems to be a fairly quiet opening here. So we want to see pretty much what the energy of the market is here for today. There's not really that much of any different news than what I think the market already has, has factored in. Nothing really dramatic has developed yet. And most of the information fundamentally that we've been talking about seems to be digested into the market. The metals are consolidating into this 1700, into the 1700 handle, 1728 handle that we've been trading at right now, and the average for today is 1728, and we are trading off the average. And going back to what I continue to say on my videos here, is that when you're trading around the average here, it's a pretty choppy area to trade from, as pretty much the standard deviation that we're looking at here is about 50-50 standard deviation. It's the average price. And so therefore what we want to see basically is the signal activate a bullish price momentum as it did here. Automatically, when the signal is activated, it activates the targets above, and what we look for is the highest probability trade. So in this case, the market going up to 1736. It completed the sell one level of the daily sell one level. That is a 50-90% standard deviation relative to the mean. This is a one-to-one factor. So the buy signal, the trend, bullish trend momentum, was activated at 12:15 p.m. last night. And another one was tested at 6 p.m. So we've had a couple of, again, different tests around the average. And I continue to tell you that I personally choose not to trade futures around the average price. It doesn't mean that I don't carry a core position, and I trade the macro picture, so to speak, or the extreme levels above the mean or below the mean on the biggest scale. What we're talking about here is a scale for day trading purposes. And so what you see here is simply the choppiness of the market between the extreme above the mean of 1728 and 1736. It completed the target here at 10:45 p.m. and activated a bearish short trigger. And if you were trading at 11 o'clock p.m. in the Globex here, you would have been able to take advantage of the signals. As I keep saying here, most of the time, what seems to happen here is that these patterns are completed at night, and then we get, pretty much this kind of action here at night when there is no volume, and prices can easily be manipulated like a wet rag until it comes down back again into the matrix of the VCPMI that indicates that the average price is 1728 with a 50-50 standard deviation. So mathematically speaking, when the market reaches these levels here, it's pretty much into the average price. And the action that we see here in the market reverting and eventually closing above activates once again a bullish trend momentum. Below it's bearish, above it's bullish. And if you want to chop and trade, this price ranges, obviously it's up to you. You're a self-directed individual. But what I'm showing you here is how I am able to produce the returns that we produce here. You can take a look at it in, my website. We post the real account there, and you can see the real live results, which I use basically to execute this live account. And I also use to teach and coach, as I'm doing here, for the benefit of those serious traders that are looking for an alternative way to trading the market outside of conventional wisdom. So what we have here is a choppy market that is trying to establish a bottom here, an acceleration, again, bullish trend momentum. And what we want to see is the energy of the market, what it does when it gets to the target, once again, of 1736. Little sloppy this morning on some of the aggregates here that we have that we're watching. So we just want to be patient and allow this market to trade with the bullish price momentum that it has been identified. Let's see what it does when it gets up to those targets, if completed, of sell 1 and sell 2. The momentum is obviously bullish, and the gold market seems to be the strongest one this morning. The silver market, as you can see, has come down into the extreme levels of buy one on the daily, and it's given us an alert pretty much that that we want to pay attention to here. We got an inversion here between the gold and silver, and the gold seems to be leading the signal here. So what we want to see is the gold market, or the silver market now, excuse me, close above 25.99, and that's going to activate a buy one level. Do prepare for a lot of volatility, and particularly in the silver market. The silver market actually is capturing the attention of the world, basically, in terms of the representation in the monetary system. And it's being recognized, I think, a little more and more as, you know, poor man's gold, as real money. The anomaly that I am dealing with right now, as most of you guys that are long the market, is that, first of all, it's very difficult to go short or to sell the market in this kind of environment. Fundamentally, the market has never been this bullish. And so what to expect is that even with the VCPMI, when it comes down into this area of blue, it tells you do not go short, even though the methodology tells you, or the algorithm basically, that if it closes below or above, it activates a short or long trigger. Here, this area below B1 and B2 represents mathematically a very high probability area mathematically. And this is where you want to allow for the market to confirm the expectation that we have prospectively given to us by the VCPMI, that if we close above 25.99, it's going to be a buy trigger on the daily buy one level, with a 90% probability to the 50% standard deviation to the mean. So it's a 50-90% relative implied volatility to the mean. And this is how we identify the signals without being confused with the chatter, without following the herd, allowing for the market to validate or negate what it wants to do from here. Now, right below the buy one level here, we have the weekly average of 25.84, which offers additional support that is identifying the weekly average. And so if the market, let's see what it trades and how it trades down here, because there are a couple of ways the market can trade. It can come down below 25.84, activate a bearish trend momentum, and the target would be 25.65. Now, another scenario is that it can come down, test it, and then close above it, and that would activate a bullish price trend momentum with a target of 25.99. Now, the third is basically it cannot come down. It cannot find the selling pressure enough to take the market down to 25.84. Remember, we're talking about supply and demand here. This is not a rocket you don't need to be a rocket science here to understand the function of the market is the exchange of the supply and demand, which essentially represents the sentiment behind the intention that buyers think the price is going up for whatever reason, and sellers think the price is going down. The market will decide always what it wants to do based on that supply and demand. So here we've had pressure, selling pressure, come into a bearish trend momentum. I say do not trade around the average because you can get very choppy. Be patient. If you're day trading, wait for the highest probability, and that is that either the market is going to go above, reach the sell one area or close to it, and or come down into the buy one area and activate a trigger. In the meantime, I don't need to do anything. And of course, there are other markets that you could trade based upon, your profile once again, and your risk and money management skills. There are 40 different markets that you can trade. But I'll tell you that I think one of the things that is important for a trader to identify is basically your own personality in terms of your ability to be able to trade and identify how many markets you can trade intelligently, not off the seat of your pants. And, in my experience, unless you're using an algorithm, unless you're using an automated program, an automated system, it's very difficult to monitor and trade 40 different markets unless you're going in there and scalping, and just executing technical data, which is the only way that you can monitor and manage this many markets. So what I do here in what I'm showing you here basically is how we succeeded last year in producing over 300% return using this application during 260 hours of live trading right here in live streaming in TikTok. Because this is, I think, an incredible tool that you as a self-directed individual, whether you're a home office or institutional trader or pension fund, whatever kind of trader that you are, you can use this as a GPS to monitor your trades, to identify the structure that you need on the market that you want to trade, and pretty much divide the trading into daily, weekly, or position trading. We're waiting for the market to activate a buy signal in silver at 25.99 on a close above it. That would activate a buy trigger. The gold market is moving into the target of 1736, so it's leading the way today, as you can see. So if you're long the metals as a core position, continue to hold, continue to monitor your core position. And as the price obviously reaches these targets here, depending upon what you want to do with that position, you can customize a strategy that will help you to lock in profits. This levels, which are pivot points, identify targets for us, but they go beyond just pivot points. We use, just to clarify, like everybody else, basic technical metrics that you can find out there, very easily on the internet. And pivot points is just one component of the algorithm, the automated algorithm that we use. We use WD-GAN formulas. We use wave patterns and cycles. We use vortex mathematics and Fibonacci sequences simultaneously. And the AI transforms these basic pivot points that you can find out there. There are different styles of pivot points, just for you to investigate this if you want to investigate on your own. And so what we created was a proprietary model that uses pivot points and all of these different indicators into an algorithm that is written in C++ and in easy language, that it is producing these results. These results are real. Now, what I'm doing here is I'm sharing with you on a simulator platform for the benefit of those traders that are self-directed, that choose to trade live or not. If you just joining me here, I would recommend for you to give yourself a little time to understand the methodology and the application of the VCPMI before you jump in. So I'm just checking out the derivatives in the market here that we're looking at, and it is a fairly quiet morning here with an upward bias. Obviously, gold BNF 520, and again, 1736 is the target. It's the sell one level, and so this would be the first level that would be recommended again for you to manage your profits. $17.35, we are completing the target almost. So for those traders in my trading room here, if you're long on the market here, this is the first target, 1736. It's going to be completed here. We've activated here a strong buy signal in the silver, obviously here, and you can jump right in if you want to buy the market in silver, buy it at the market and use the 25.99 as your stop level. So you 2604.50, 2604.50. Is the long trade. The target automatically is identified as 26.19 if you go long. And it looks like we're getting a lot of buying coming into the market here. So you want to prepare for a lot of volatility in this market here. Fast market in the gold market coming up. Fast market in silver coming up. Target was completed. In gold at 736, 1736, 35.9, 36.20 last. Completed the first target. If you have multiple positions, you can take the balance out at 1742. Now, we wait to see what the market is going to do on the next bar. On this bar, the market met the target again. From the long at 1728, it activated a bullish trend momentum. The target was completed, 1736. So you can use this now to manage your inventory accordingly, to recalibrate your position, to synthesize, to hedge, depending upon how you want to manage the risk. If you have multiple positions, you take some out here, and you can carry the balance with a trading stop, or pretty much allow it to go to the second target here that we're looking at, which is 1742. For now, you can see the market stalled right into the target, and that's why the signal goes neutral now. And this is the AI behind the algorithm in how to trade these pivot points. Pivot points are simply levels of support and resistance. The algorithm activates these pivot points into a probability model that gives them mathematical probabilities that, based upon the market action, obviously it would activate or negate the patterns above these levels. From up here, from 1736 all the way to 1742, and even the 1751, which is the weekly target, it's telling you that you're entering an area of distribution of supply, where even though the price may go up from here and turn this resistance into a level of support, every time it goes above that price and closes above it, it activates the level above, and it becomes the support for that target, for that price level. But the macro picture begins to tell you that this area here is an area where you potentially are going to see supply come into the market. The question is whether the buyers in here, going back to the basic law of economics of supply and demand, are stronger than the supply that's being offered. And this bar here confirmed that. It took out all of the selling pressure that came in. And this is what the algorithm is saying. It's been preparing us. So now we're trading above 1736. And we are entering, again, an area of distribution of supply. So you can begin to use this area to manage your profits, depending upon how you're trading. Short-term, intermediate, or long-term. Fast market in gold here. This is buying power that's going on, as you can see. This is taking out all of the supply up here. Next target is 1742. Next target in gold is 1742. And we're beginning to see the derivatives as well turning around here, ladies and gentlemen. This is very exciting. The market is moving in the direction that is pretty much completing targets, patterns. And what really is interesting is that all the way up to 1777, it's in red. And so in order for the price to validate the completion of this bottom and correction, we need to close above the buy one level of 1781. Closing above that level will validate that this area here was the bottom. And you're looking at pretty much the market make it that bottom on its own energy, on its own supply and demand. And when I'm trading this during the day, to be honest with you, as you can see here on this segment, that I have not discussed any fundamentals hardly at all in here because I don't need to. The price resolution, when it gets to these levels, already has accounted for those fundamentals for the day that we're day trading here, obviously. And we can expand the analysis into the larger, trends and follow the same structure, the same methodology with different data, obviously, and different levels, but the same structure. 38.90 trading up 970 here in gold. Very constructive patterns. Silver 26.17. So the signal here at 26 earlier that we purchased obviously is working. You can see the buy signal activated here was huge. Green bar. And now it's moving into the average price target of 26.19. So if you took this trade, we recommend it, trail it with a stop if you have it, or, you got about a $500 profit in there. Depending upon your multiples, you can decide what to do with it. But again, on the first trade, I have a target of $300 on the first trade. And I trail the balance with a trailing stop, and I allow it to go to the next target. In this case, it's the average price. The silver market is getting very, very active here. Both signals pretty much are into the average price target, except the gold market seems to be moving into the sell to level now of 1742. Fast market in gold. Gold is picking up a bit. And it's carrying the silver with it. 26.17 last on silver. it's bringing in the derivatives along with, for the ride. They're turning into a positive again. GDX on the positive, Nugget on the positive. Continue to hold until next target, and we'll see what the market does in here when we get up to the 1742 level, which is the sell to level in gold. 2673 is the sell to level in silver. The sell one level is 2654. Picking up bid 2618 silver. Silver catching up. The gold market is taking leadership. Let's just continue to allow the market to come to us here. I want to focus today on making money. And if you're following this, congratulations. Just trail your position. If you took some profits, if you have multiples, trail the balance. Continue to hold on to your core position. This is very, very good action here for the gold market. And I think, again, as of today's action, looks like the gold is leading the parade. $26.19 for silver. $26.19 for silver, very strong market. And I think, once again, we're getting a lot of volume in here that is pushing the market into that average price. And if we get the market to trade through that average price, again, it's going to negate this bearish trend momentum that was activated. We ran alongside. We picked up a buy trigger from the buy one in silver. We met the target here right now of the mean, which is 2620. And so you can unload some of the profits here, continue to trail the market, the balance with some stops here underneath if you want to trail the market. The next target for silver is 2654. The signal was completed in silver from earlier. So if you went long on the silver, take some profits on this. Book some profits here. We want to see how the market trades into that 1750, 60 area, which is where we headed for. Continue to hold the market here. Continue to hold. Be patient. I think we are building a bullish momentum here. So you can see the market getting out of that target here a little bit, reverting a little bit. We want to just be patient with this. I think the market is completing targets as it's supposed to. And so from a day trading perspective, you want to obviously monitor this activity for your portfolio accordingly. Market reverting from that target here on silver. The average price completed the target, and now it's reverting back a little bit. Some profit taken is occurring, as you can see. Gold as well. So this is the pretty much structure the algorithm recommends for you day traders, how to use this structure pretty much, as you can see. And it's a systematic way of trading the market for what it is for day trading. Now, you want to make an argument about the macro picture. You want to bring in the short squeeze. You want to bring in the stimulus and all this other rhetoric that's already factored in the market. If you hear the internet has been saturated with pundits calling for silver at ridiculous levels and gold and short squeeze, and the market is not reacting to it. And that's what's frustrating a lot of buyers, that the market is not reacting to the way the fundamentals seem to indicate. The one thing I want to tell you, and I want to share this with you because I've been around the block here a few times, that the gold market goes when nobody basically is there. It will psych you out. It will desperate you. It will depress you. It will, when you give it up, when you give up, that's when it will go. And it will be during the most controversial sentiment. For example, during the most bearish sentiment, the price will revert. And I don't think we've seen that bearish sentiment yet come into the market because obviously everybody is looking for the short squeeze to materialize. But take a look at the cash prices in relation to the futures. There's an anomaly there where the premiums are going skyrocket high in the cash markets. And even though the paper market is coming down here weaker than the cash market, we're beginning to get an inversion, a contango, you might say, building up, a backwardation basically building up that indicates that we are running into physical problems. We are running into problems obtaining physical silver, physical metal. But that problem seems to be in general here when you talk about the tremendous disruption that we had in the supply chain. Most products are going to be in short supply as we move back into the economy. And that fear, or that you might say factor that is going to determine pretty much how fast inflation is going to appear, is the velocity of money. And we want to see how fast people are willing to spend, when they get back into the economy. And I think that's what's going to determine price inflation, because we're seeing asset inflation across the board. I mean, just take a look at the stock market, Bitcoin. Last week, there was a record sale of a virtual art for $62 million, which is just a series of codes. So this is, I believe, an extreme level. Real estate is in a bubble. And particularly if we begin to see interest rates go back up again, as the 10-year note is beginning to indicate, you can see a massive collapse in the financial markets if that's the case. So my opinion is that the Feds will not allow for interest rates to go up. We are, I believe, a hair away from the Federal Reserve basically controlling the yield curve. Yield curve control is about to be implemented. They have to implement that, or interest rates are going to destroy the world economy. So the fundamentals have never been so bullish for precious metals as a consequence of the collapse of the monetary system. But markets will go when they want to go, when they are ready to go, not when you want them to go, not when I want them to go. And so that's the price that we as traders have to pay, is that essentially we have to allow for the market to dictate and take the leadership, so to speak, of what it wants to do, and for us to follow as traders, not try to anticipate without some solid foundation, so to speak, as most traders do trade the market, which is off the seat of their pants. But it's a learning process. It's a learning curve that we all have to go through. And what I'm sharing with you here is a trading tool that we were able to put together that is pretty good. It's doing the right thing for us, and I think for our subscribers, our traders that are using it, it's becoming very effective. The one thing that we can't control is obviously the market, and so the only thing that we can control is the way that we manage the risk to enter into that market, the way that we manage the risk when we decide that we want to take a trade, whether it be in futures, whether it be in stocks, or whether it be in other assets. It's measuring the risk, primarily, in my opinion, the main focus. Primarily when you're day trading, it's all about managing risk. And so if you put that into a systematic structure, a methodology that you can follow systematically, that has proven itself, as I'm showing you here, basically with the signals, and you can see some of my old videos, and we've captured some real signals here in this live streaming that you, as a self-directed individual, or if you are trading live, can really benefit by this during this hour. But if you want to have the full exclusive membership, so to speak, and all the support that we provide traders, please reach out to us. Reach out, give us a call, send us an email. We provide very, very high caliber coaching and mentoring for serious traders, particularly for experienced traders that understand the dynamics of risk, money management. I think this is a phenomenal tool. It changed my life, and if it can do that for me, I know that it can do that for you. It's up to you. It's up to all of us, basically, that even during times of crisis, we can take a look at an opportunity and turn it around. And what we're going to see here, for those that are aware of what's going on, is that this chaos, really, truly, this chaos was a blessing in disguise in so many ways. And this, I say with all due respect to those people that are experiencing suffering during this time. But what the VCPMI did, or what this pandemic did, is basically uncover the weakness of this system, the corruption of the system. It uncovered the anomalies that we have in the disparities of wealth that we have. It discovered that, for the past, God knows how many years, it's all benefited the rich, the elite. And particularly for the past 10 years, bringing rates down to almost zero. And when you factor in inflation, obviously we're looking at negative rates. And with this ability to borrow at almost zero interest rates, you can borrow basically, pay literally no interest on your money and gamble it in the market and make a fortune with our money, with your money, my money. That is the stimulus that everybody is talking about. It's the money, it's the future of our kids that's being spent. All this free money that's going into zombies, companies, into a corrupted system, is money that is essentially the future of our kids. And as they open up the printing presses, they are destroying potentially the future of our kids, the future economically, because what essentially this stimulus is doing, and it's going to continue to, is deteriorate the integrity of the value of the US dollar as the world's reserve currency. The US dollar is not backed by any natural resource except the trust and faith of the US government. And, just go back to 90 years and you see what the government has done, particularly in 71 when they decided to lift the gold standard of the US dollar. That was the beginning of the collapse of the US economy. That was the beginning of inflation. That was the beginning of the bubble, the dead bubble of fiat currency that we're dealing with right now. Continue to be patient. I believe the metals markets are a profound opportunity. It's a generational opportunity. If you want to speculate, there are plenty of places to speculate. Bitcoin, great speculation. Not a currency, though. Not yet. So lots of speculative instruments that you can take a look at. Silver is sound money. It's real money. It's been poor man's gold, real money for thousands of years whenever we had a collapse in the monetary system. And it's becoming more real money than ever before. So, yes, there is a tightness of supply. It potentially can get worse. The premiums are sky high. You can't get delivery for a long period of time. And that is the making of a potential explosive bull market. And I believe the metals are a giant awakening. Continue to hold your position, your core position, and be patient here. I think we're days away from potentially a major breakout occurring in precious metals, but we have to allow for all of this rhetoric, this bullish, extremely bullish sentiment to dissipate. And so I believe the gold market will go when you begin to see on the internet all these pundits that are bullish in the metal right now turn bearish, and begin to see now people giving up, turning bearish to the gold market. The gold market is over. And that is when you're going to see the party begin. Thank you again for this opportunity, ladies and gentlemen, to share this with you. And until next time, my friends, take care. Be well. I'll see you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
And welcome to another edition of the Ticker Talker Spotlight here on Ticker Talker TV. I'm Bill Barry, Global Head of Business Development for Ticker Talker. With me today, Mr. Patrick MontesDeOca. Patrick, I hope I didn't butcher that too badly.
You did well. Thank you.
Thank you. I appreciate that. Patrick is coming to us live today from Los Angeles, California. Hey, Patrick, how are you? How are things out in sunny LA?
The land of make-believe.
Indeed.
The land where all dreams come true.
Patrick, I know from our previous discussions you have a somewhat different background than many typical traders. Can you share with us, please, how you got started in the markets, and what about the markets first caught your interest?
I think it was about 8 or 9 years old, and I went to my uncle's office, and this was in Colombia, South America.
And he was an importer of coffee and commodities, basically. And I was sitting right next to the desk where they had the Reuters, the tape. And all of a sudden I started hearing this. And it was the most exciting thing that I have ever heard. And it fascinated me. Besides the fact that he drove a fancy car, had a big home, had a beautiful family, and so on and so forth. It was the beginning of what I call the emotion